Now that leads me to Nvidia, big dog, the stock that matters the most to the stock market out of any of the others. What's my opinion on these earnings? What's my opinion on, is this stock about to go on another big run here? What's my opinion on what does this mean for AMD stock? Okay, well, obviously the stock's up after hours, but it's not like it's up a lot. Like 4% move, it's rather modest, especially for a stock like Nvidia, right? So which means people are kind of like, it almost feels a little bit more like a relief rally than like an excitement rally, right? No, they beat on their earnings. Who didn't think they were going to beat on their earnings? No one. Everybody knew they were going to beat on their earnings, right? 96 cents adjusted versus 93 cents. Revenue also beat 44.06 billion versus 43.31 billion. That's already a problem. You might say, how's that a problem? They double beat. Big problem. Nvidia spoiled investors for the longest time. Nvidia was not just coming in and beating numbers. They were obliterating numbers. They were obliterating revenue estimates. They were obliterating guidance, earnings per share. It was like, if you saw the stock really from 2023 all the way through 2024, they were not like small beats. They were just knocking out of the ballpark every single time. Now they come in and they beat numbers, but it's like 3 cents EPS, right? They beat revenue by, they didn't even beat revenue by $1 billion. For Nvidia, that's bad, But then the guidance came out. Nvidia said it expects $45 billion in sales for the current quarter. My guess is they're going to do better than that, by the way. My guess is they'll probably do 46 or 47 billion, somewhere around there. But they guided for 45 billion. That's underneath analyst estimates of about $45.9 billion for the quarter, right? Now, the company said its guidance would have been about $8 billion higher, except from the loss of sales from the recent export restrictions to China bound H20 chips. So, if it wasn't for that, we could be talking about Nvidia would have, blew numbers away. But this export deal is a huge deal. $8 billion of lost business there? That's substantial, man. Not a small number. Nvidia says its gross margin came in at 61% for the quarter. If that whole situation, the whole China-related charge wouldn't have happened, they would have been at 71%. So we're talking about 1,000 basis points. 1,000 basis points of a difference of their gross margin because of that, right? Now, additionally, Nvidia CEO Jensen Huang told investors on the earnings call that the $50 billion market in China for AI chips is effectively closed to U.S. industry. Now, that could always get removed. So do keep that in mind. Don't assume just because that's the way it is right now, don't assume that's the way it's going to stay. Here's the deal, right? China could leverage us. China could say, in regards to trade deal, hey, we'll do this and this and this, but we want those chips. And maybe Trump's going to make some concessions on that, right? To a certain extent. I don't know about everything, but maybe some concessions. And so don't assume that the China market is closed for Nvidia, AMD, and these other companies. It might be, but don't assume it's going to stay closed for the next several years. For all we know, a deal could come out 60 days from now, 90 days from now, 30 days from now, 120 days from now that says these companies can sell into China. Maybe it's just that some products are limited or something like that. Keep that in mind, folks. Keep that in mind, okay? Don't assume that this is all done. And keep in mind, if all of a sudden we start getting word that, that's going to be part of the trade deal or something like that, then you talk about meaningful upside to Nvidia stock for the remainder of this year. Like, let's say it's 2 months in the future and we get news come out, U.S.-China trade deal's done, and our semiconductor companies like Nvidia and AMD can start selling in China, boom, you're going to get a banger move up in Nvidia stock. And obviously AMD as well. That would be massive, massive news, because all of a sudden you're going to be talking about billions upon billions, if not tens of billions of dollars that these companies will have in revenue per year that they won't have right now, right? And then what that means to the bottom lines is substantial, right? And keep in mind, Trump has to take this stuff serious, because when Nvidia says their guidance would have been $8 billion higher, listen, that means the stock market would have been a lot higher, right? Which obviously looks very, very good for you as a president. That means that company then has ability to hire a lot more employees, pay out bigger dividends to investors, do all these sorts of things, right? Build new corporate campuses or whatever. So, Trump's a negotiation guy. He loves to do that game. Maybe he's going to negotiate for Nvidia and AMD to make even more chips in America, and that's going to be part of the deal. So it's going to be like a three-way deal where, Nvidia and AMD have to agree to some things, right? And then additionally, China has to agree to some things, the US has to agree with some things, and it's a triangle relationship, and it all ends up working out in that. We'll see. But right now, none of that's priced into Nvidia or AMD stock. So it's just something to keep in mind. And, that would be very, very bullish if that does happen. And, get ready for an absolute ripper rally in Nvidia and AMD if that does happen. Okay. Now, with that being said, on 1000X X page today, not sure if you guys follow the 1000X X page. And by the way, if you don't follow me on X, I always post a bunch of stuff every day. That's very important. You can always go down this description area of this video and click and join me if you use X. But in regards to that, I posted this on the 1000X X page today, right? 1000X stocks. I said, Nvidia moving up after hours, but not dramatically. I said, you can see that Nvidia really needs to grow 20% plus per year for several years to make any decent money. If growth rates falter the next few years, then no gains would be likely, right? And, if you look at these kind of projections I ran here on our intermediate projections on 1000xstocks.com, look at this. I ran their revenue growth at 20% per year. From 2026 to 2029. I did the net income growth at 22%, right? And I ran them at a PE ratio of 28 to 35. And you see, you won't really make any money in the stock over the next few years if that's all they do. So the moral of the story is here in regards to Nvidia, even 20% revenue growth per year is not good enough to really make a lot of money in the stock. Now you might say, well, if they're growing 20%, shouldn't they have a PE higher than that? The issue is they're still seen as a semiconductor company, and so they can't really get a huge valuation bump there. People always value like the PE ratios of semiconductor companies very, very low, right? And also their net margins are already so incredibly high that I believe analysts have trouble thinking their net margins can grow any substantial way from here, and if anything, they'll go down, right? So you can see that it's going to be very difficult to make money in Nvidia unless they grow over 20%. And the more they grow over 20%, let's say they average 25% growth or 30% growth or 35% growth, then Nvidia can be a big money maker over the next, we could call it 3 to 5 years. But if this company grows revenue 20%, or especially if they grow under 20%, it's going to be hard to make money in Nvidia. And that's why it's really important that the Chinese market gets opened up. So a company like Nvidia can sell, because if Nvidia can sell to China, that's going to increase their revenue dramatically. And then we could be talking about they could comfortably be ahead of 20% revenue growth per year, 2026 to 2029, right? If China's closed down for them, it's going to be hard to see Nvidia growing at that sort of rate, because then they're just going to be counting on Meta, Microsoft, those sorts of companies, OpenAI, and all those companies to spend more and more and more. And those companies are going to spend more and more and more, but I think the rate of growth of those companies is going to shrink substantially over this next few years. So do keep that in mind, right? And so it just gets harder to kind of make money in Nvidia stock, right? And I even asked this on the 1000XX page today. I said, Nvidia or AMD for the next 5 years? And my opinion is AMD definitely should outperform Nvidia quite substantially. And the reason being is what you're going to see an interesting phenomenon that starts in the second half of this year, where AMD growth rates, and at least in my opinion, based upon everything Nvidia stock I've owned on and off for years, so I know that company very well. And AMD, obviously, I'm now a big shareholder of that company. It's now the second biggest stock in the public count. I believe that AMD is going to start outgrowing Nvidia revenue-wise in the back half of this year. The back half of this year, meaning the third quarter, okay? And that's going to start as a slow outgrowth, and then it's going to get more pronounced in 2026 and 2027. And so when it comes to AMD, I'm getting a stock here at a 2-year forward piece significantly below Nvidia, but I think we're going to get far stronger growth from AMD, which means the stock price gains in AMD are going to be much more substantial than Nvidia over this next several years, at least in my personal opinion, based upon all the study I've done in this business, right? And the outperformance has already started, in my opinion. If you look at where these stocks bottom kind of in that April timeframe, AMD's up 44%, Nvidia's up 39%. We're not even to the second half of the year. I think you're really going to see that outperformance get accelerated the second half of this year through 2027. So that's my opinion in regards to that, okay? Now, listen, if you're watching this right now and you've been investing for 2 years or less, Listen, a lot of you guys don't know what the heck you're doing. You don't know how to value companies. You don't know how to read an income statement. You don't know how to read a balance sheet. You don't know how to judge business models. You don't know how to run projections, any of that stuff. And if you're doing that and you're watching this video right now, you need to understand that stuff. You need to know how to do that stuff, or you're going to find yourself in a lot of trouble. You're going to find yourself underperforming. You're going to find yourself in bear markets. It's going to be brutal on you. Not all markets are like this one's been the last month and a half or so, where it's just up in a straight line. And so you got to know this stuff inside and out. And if you don't, you're gonna miss out on some incredible opportunities, and you're going to cost yourself a fortune of money. And so for you newbies, learn how to read income statements, learn how to read balance sheets, learn how to value companies, learn how to run projections, learn how to understand if a company's undervalued or overvalued. So when you go to buy a stock, you're confident when you make that decision, and you know whether you're getting ripped off on that stock, because every deal, every time the stock market opens, it's going to be selling some stocks at screaming buys, screaming deals. And other times it's going to open that stock market and you're going to be getting basically scammed, and you're going to be getting an absolute horrible deal, and you're being set up into a situation that you're going to be in a stock that's not going to make money for years to go in the future. And you're going to be sitting on that stock 5 years from now still wondering, like, am I ever going to make money? Okay. And so the more knowledge you have in understanding all this stuff, the less probability you'll have of, making huge blunders and obviously costing yourself fortunes of money, and then not seizing opportunities. So learn all that stuff, guys. And if you need help understanding all that stuff, my private group is designed to do exactly that. Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. Alrighty, next one up here, Ed Yardeni.
Ed, welcome. I actually was, I brought it up already. I was going to save it for you because I was thinking of you when I thought about it, and that is maybe it's better to be a technician. And if you just look at internals and just ignore everything, if it works. And sometimes it works, sometimes it doesn't. But you've been whipsawed. You've been whipsawed all over the place by depending on what the tariff comments du jour are. Where are you now? I mean, you said 6,000. We're at basically 6,000. After this morning, we'll be at 5,900.
Actually, you're right, because you missed one of my whipsaws. I went back up to 6,500 a couple of weeks ago.
Yeah, when I might have seen that. It's hard to keep them all straight.
Joe, I've warned my accounts that I reserve the right to change my mind as often as the president does. But I haven't actually done that. I started out the year very optimistic at 7,000, dropped it to 6,000 and 6,400 in early March, then 6,000. And now I'm back up to 6,500. So, yeah, I really need to get a neck brace for the volatility that we're seeing coming out of Washington. But all in all, I've remained bullish. I think it's a bull market. I think we had a correction. I think we made a low on a correction low on April 8th. And I think we're heading higher over the rest of the decade. So my underlying bullishness remains intact.
Yep. I think you're like the popular kind of cars being sold now. You're a hybrid. Any I think good market prognosticator uses both technicals and fundamentals. There's no other way, I don't think, to do it. You try to pick the best things that work for you.
I think the technical idea is okay for day traders, especially when you have this kind of volatility. Day traders love this kind of volatility, assuming they're on the right side of it.
You've been bullish, Ed, regardless of fundamentals, based on momentum. Right? Mm-hmm. As far as I can tell, or based on thinking that we're in a bull market that is probably going to be resistant to.
So this is important what they're showing here right in front of you right here. This is very important. So this is a VIX. The VIX is over 20 still. You want to talk about really getting people bowled up? Have that VIX keep falling. Have that VIX go down to 17, 15, 12. Oh my gosh. You want to really talk about people starting to get excited about the market and really start getting bullish? That doesn't mean the VIX is dead, by the way. VIX could come back later on this year with a vengeance. But, if this VIX just continues to die over the next few months and, over the summer, the VIX is just night-night, woo, you want to talk about a melt up in the market? Oh my gosh.
A lot of things that, many times it is. Doesn't matter what the government or the president or anyone else is doing. Bull markets just happen.
Yeah, one of the things I've learned over the years is that it's incredible how well the economy does and how well the stock market does despite Washington. I think you're right. In some ways, we've spent way too much time and attention on what happens in Washington, and we ignore the fact that the rest of us working stiffs do everything we possibly can to make things better for ourselves, our families, our communities, our businesses, and it's working. I think it's the resilience of the economy that's really coming through loud and clear here. I mean, if you're looking for some stability here, I think it's actually in the economic data. The weekly retail sales numbers look fine. The initial unemployment claims look fine. The capital spending outlook still looks pretty good. I mean, clearly there's uncertainty. On the other hand, the president is right to point out that a lot of money is being committed to onshoring in the United States. So stay with the fundamentals for the long haul, play with the technicals for the short-term trades.
Hey, Ed, explain the bond market. Yields are back down today. Part of that is because yields in Japan are down. Maybe the Japanese central bank is considering.
Listen, don't play with the technicals. Once again, that's why I love having the reaction channel. Did I not just react to a lady, Katie Stockton, I think it was. What was that, a week or two ago, right? Talking about, technicals are starting to roll over. This is bearish for the market. What is she talking about? 20% down, whatever, right? Well, I would bet a lot of our technicals just went bullish again and actually look promising. And what did I tell you all it would take to turn around those technicals? I said you get a few days of down, then you get the market to start rolling back. All of a sudden, these technicals start saying, buy, buy, buy. What have we seen? Exactly that. After that, we got some down days. And then all of a sudden now we've gone bullish again. And I bet you a lot of these technical indicators are starting to flip. You never mind if you keep getting a couple more bullish days. Say Nvidia reports a banger. They send all the big tech up. Oh my gosh, the technicals are all going to start screaming. There's no exhaustion here. We got a lot more room for upside. And then, don't play that game, man. Don't play that game. Focus on the fundamentals of companies. You see a great company trading at a great price. You run your projections on 1000X. You run your advanced projections. You run your intermediate projections, right? And it says buy, 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 right? And you love the company. You got to do what you got to do. Technicals, mumbo jumbo, forget it. Forget it.
Issuing fewer long bonds to pay for some of the money that they're going to be needing fiscally.
Right.
But these are pretty important. Every time the bond market reacts and yields jump, the stock market sells off.
Yeah, I think that's a very important relationship. We've sort of had the bond market and the stock market acting as vigilantes with regards to what is happening in Washington. And as we all know, the president pivoted from talking about reciprocal tariffs on April 2nd, Liberation Day. And then on April 9th, he reversed himself because on April 8th, we basically had the 10-year bond yield going from 4% to 4.5%. So that got his attention and made him realize that, he does have to deal with another constituency that votes on a regular basis, and that's the bond market and the stock market. And the two have been working in tandem. The stock and bond vigilantes have reacted kind of coincidentally. Right now, they're calming down because they perceive that there is some light at the end of the tunnel on this trade war. And I think the stock market's looking past all this already into 2026, recognizing that this too shall pass. And times are good now, and they'll get only better.
Well, we were that on Friday. We went. Okay, so you mentioned it. We went from escalation April 2nd, de-escalation April 9th. Right. Back to some escalation on Friday, de-escalating. Right. So I don't know which way. I don't know which we're in right now. But as far as the vigilantes, how do you look at this bill? And I don't know whether, a reconciliation bill really makes that much of a difference long term. But is it, you view it as 1.6 trillion in cuts that wouldn't have been there, or do you view it as another deficit busting blowout bill, which
Another
is
deficit busting
Well,
blowout
I
bill.
think from what I've seen, it looks as though it's going to add to deficits, not reduce deficits. I think the Congressional Budget Office, for what it's worth, is saying that under current law, we're going to have another $20 trillion of government debt.
the vigilantes are-
Exactly, and this is why I explained this a million times, guys. I already figured out the whole system. You can't cut the deficit or in any substantial way. You can't cut the debt in any substantial way, because at the end of the day, if you do that, you will be voted out of office. Your party's going to be ruined. You could say, okay, Trump could have came in and try to cut the debt and deficits and all those sorts of things, right? It would put us into a massive recession, and people would, the Republicans would get absolutely wrecked come midterms, and then the next president, 100% Democrat. Doesn't matter who you put out there, because people would be so mad. So people talk about the debt, deficit, those sorts of things. They don't actually care. What they actually care about, do they have a job? Can they buy things for their family? And if they don't have a job because you had a massive recession or their earnings get cut massively, that puts tremendous amounts of stress on them, tremendous amounts of stress on their family, and at the end of the day, their life. And you will not win the next election. You're guaranteed out. And that's why you can't do anything about it. You might be able to make little dents here and there, but you can't do anything major about it. Nothing. Because you will lose you just sacrificed your party in the next election, if not the next several elections. Because they don't forget quickly, right? They don't forget quickly in regards to that. So that's something important to keep in mind here. And so every time you hear these politicians talking about, they're going to cut the deficit big time, they're going to cut the debt, dream on.
wimpy. The bond vigilantes under pretty. I mean, they're like St. Augustine.
Really
it's like make me chase. They're still like, someday we need to deal with this, but not today.
Yeah, that's right.
Not ever.
And that's been my position is I'll worry about the deficit and the debt when the bond market worries about it. And every now and then the bond market seems to worry about it. It did that in 2023 when the bond yield went from 4 to 5% in a few months. We had that basis trade issue back on April 8th. And so that seemed to be a bond vigilante issue. But the bond vigilantes are not the only players in this game. The Treasury demonstrated on November 1st, 2023, that if the bond vigilantes don't like bonds and notes that the Treasury is issuing, the Treasury can simply issue more bills. And that's what brought bond yields down in 2023. And the bond market has a long memory and recognizes that they are playing against a very powerful player here, and that's the Treasury as well as the Fed.